All right, welcome everyone. Good evening and welcome. I really appreciate y'all being here. Anytime I get the opportunity to jump on the mic and talk with other traders, I definitely do not take it lightly. And you know, I've done a lot of webinars and presentations over the last 5 or 6 years. A few of them in person before the pandemic, most of them online like this one. Now with that being said, I don't think I've ever been this excited about a webinar because this one has taken place with great timing. And as I'm sure all of you know, the environment in the markets is changing. So it's our jobs as traders to make the necessary adjustments. That way we can ensure that we can continue to trade successfully even as things change a bit here. So we're definitely going to talk about the recent shift in the markets and the changes I've made to my own game plan. But first we'll talk a little bit about 2021. And what I would like each of you in the chat to do here is let me know down in the chat, how would you describe your 2021 as far as trading went? Was it a successful year? Was it a frustrating year? When I look at my own trading, you know, the first 5 or 6 months of 2021 felt a lot like 2020. Everything's cranking, everything keeps trending higher. Quite frankly, it was an easy game. And I think we're all in agreement here, even if you're a newer trader. Right? We're all kind of drawn to the market for the same reasons, so we all know the market offers tremendous potential. The big question for all of us right now, how can we continue to create success in a changing market environment without letting the emotions get in the way? And mind you, being over here at Simpler, I get the opportunity to work with a lot of traders on a daily basis. So another big question right now is, why are so many traders struggling? And the truth is, it's actually fairly simple. When there's adjustments to make, you just have to make them. And I think right now the biggest reason that a lot of traders are struggling is their losses are outweighing their wins. The numbers aren't really looking too good. The numbers aren't working. We want to make the numbers work. So 2021 versus 2022. Ever since that market of ours bottomed back in March of 2020, I think we've seen one of the most ridiculous and relentless uptrends we're ever going to witness. Now, over the last handful of months, we have seen a huge shift in the markets as things transition from incredibly bullish to incredibly choppy. And here's the thing. In a market as bullish as the one that we saw over the last few years, it is super easy to start developing some bad habits. And I think one of the absolute worst habits you can develop is one of ignoring risk and letting your losses be bigger than your winners. We can't keep banking on the market and the trend to keep on saving us. And a lot of times with most option strategies and the way that they're taught, the losses just tend to be bigger than the wins. So this is a huge problem because when you let that happen, the numbers are working completely against you. And a lot of times as traders, we don't even realize this. So a huge part of trading successfully in any environment is finding a way to make those numbers work consistently in your favor. And again, we really want to eliminate all the emotions surrounding each trade and view each trade as nothing more than a flip of the coin. The key here, of course, is we got to make sure that coin lands in our favor more than it doesn't. But I really want y'all to listen up tonight. There's some really important stuff we're going to cover, and a lot of this is just getting back to the basics. The last few years, to be frank, have been easy. Moving forward, it's going to be the risk management and the skill set that separates the good traders from the bad traders. So just realize there's adjustments that have to be made here, and if you can make them, you're going to be in good shape, okay? Now, in terms of making adjustments, I've definitely made some adjustments in my strategy this year. However, it's a lot of the same focus, just with some tweaks. So I'm still focused on trading basically one setup, long or short, and I'm going to continue to trade essentially nothing but one strategy, credit spreads, which we'll talk more about here in a bit. But as far as the adjustments I've made that we're going to discuss here tonight, well, for one, I don't play the favorites game anymore, right? And I'm definitely guilty of this. And let me know in the chat if you can relate. But over the last year or 2 years or so, I really fell in love with, big tech, big semis. Really fell in love with the Apples, the Amazons, the Googles. I'm not doing the favorites game anymore. Now, I have a favorite setup, and that's all I care about. The setup and not really the stock. The second shift here for me is I'm looking for a higher frequency of opportunity. So the beauty about, no longer focusing on your favorites, you're opening yourself to way more opportunity, both to the upside and the downside. And I'm also looking for easier moves, right? Not these crazy, super above average moves. I'm looking for good, steady, consistent base hits. That way I can rinse and repeat more often and consistently turn over my capital. The fourth adjustment here, and this is the biggest one we're going to touch on tonight, I am implementing strict risk management rules with a laser focus on making sure my risk reward is always working in my favor. And in terms of working a good risk reward, this is what I mean. As traders, we want to think in terms of numbers, because quite frankly, emotions don't have any place in our trading business. So start thinking like a trader by understanding and focusing on the numbers. So this is your win rate, this is your risk reward, and the frequency of your trades. You got to understand the relationship between those three variables. And again, trading is a business. So I think when you look at trading in that perspective, your job as a trader changes for the better. So to me, that's the formula for, call it, safe, aggressive growth. We want to produce a good win rate. More importantly, we want to keep our losses smaller than our wins, and we want to rinse and repeat as often as possible. And as the market changes here, these are the things I think we want to focus on. So we'll talk a little bit about the recent shift in the market. What's taken place here is that the trends that have served us incredibly well over the last couple of years, those trends are shifting. So therefore, it kind of means the opportunity set is shifting as well. The opportunity might not be in the spots that we're typically used to focusing on. So for example, lately we've seen energy rally while big tech and big semis take a big backseat. And I really can't explain just how important this is going to be moving forward. You can't bank on the market bailing you out anymore. Right now you don't have the wind at your back, meaning for the last few years the market has been so strong, it's easy to start holding on to losing positions, waiting for the market to pick them back up. And hey, when that works, that's great. But that kind of thinking, that kind of lack of execution could very likely get you crushed this year. So that's what I'm trying to stress, all right? Things are changing, and we need to change our mindset and our risk management accordingly. And I'll tell you all in advance, the name of the game moving forward is going to be risk management. Plain and simple. Those who lack risk management skills will get wiped out. We're not going to let that happen to us. So again, like any other webinar we do together, I really want to get you thinking tonight. But more specifically, I want to get you thinking like a professional trader. The last 2 years, generally speaking, anyone can make money. Moving forward, welcome to the big leagues. So you need to think, execute, take profits, manage risk, walk and talk like a professional. And if you can do that, and mind you, I'm confident that each of you can do that, well, I'm also confident you can continue to find success in this market, all right? Now let's take a quick look here at tonight's agenda. So we don't have too much time together this evening, but there are a few important things I want to share with you. And remember, my ultimate goal here at Simpler, I want to help you simplify your process. I want to help you find consistency, but really important to me, I want you to enjoy the process. Right? I want to teach you how to eliminate those emotions from the trading equation. So tonight, my friends, we will cover how to make the numbers game that is trading work in your favor with a good win rate and an even better risk reward. We'll talk a little bit about common mistakes that prevent most traders from making money, and then I want to show you how I structure a low-stress way to trade really clean setups, both long and short. And then we got to talk emotions. So managing emotions and incorporating a trading psychology, but one that can actually work for us, right? And in terms of emotions, I think it's time that we start viewing our losing trades as nothing more than a cost of doing business. That's really all they are. Now, there's a reason why oftentimes losing trades are devastating to so many traders, but the good news I'm trying to share tonight is you can change that, and I'm going to show you how. But before we get jumping into the good stuff here, quick introduction for those of you that aren't familiar with me. My name is Taylor Horton, and I am the Vice President of Directional Options Strategies here at Simpler Trading. And I've been trading for just about 10 years now. So I was fortunate enough to get started young. And I got a pretty strict focus. I focus on trading essentially nothing but squeezes. And I like my weekly charts, I like my 3-day charts, I like my daily time frames. Keep in mind, you might be a day trader, you might be a swing trader, you might like 15-minute charts, weekly charts. The things we're going to discuss tonight, guys, they apply for all of us. So I've got my favorites, but the things we're going to discuss tonight, they're all things we all got to keep in mind. Now, additionally, I utilize nothing but credit spreads to further stack the odds in my favor. And here's what I want to do for all of you. We're not going to go too deep tonight into the squeeze setup, but I'll make sure we post a link to my squeeze video here in the alerts, so that way if you are unfamiliar with the setup, you can go on ahead and check it out. But my trading journey actually started because of my dad. So a couple family pictures here. So my dad has invested, traded, and ran a wealth management firm ever since I was born. So he was my introduction to the stock market, and to this day he continues to serve as my first and my most important mentor. And between him and my mom and their support, they're a huge reason as to why I was ever able to become a trader. And I really got hooked around the age of 18, 19. So I'd say around the age of 18, I kind of had my mind set. I wanted to be a full-time trader. Now, even with a dad as a mentor, and even with my dad being a professional, like every other trader out there, I had to make the mistakes. I had to go through, the struggles and the trials, the tribulations, the frustrations. It's something we all have to go through. But I ultimately did find my groove. And, trading is a lonely endeavor. I think that's why I love Simpler Trading so much. We have a community here. But because I was lonely, I ended up starting a chat room called Focus Trades. And that kind of blossomed into a family of 300, 400, 500 traders. And I always like to ask traders this question. So I want y'all to let me know in the chat. And even if you're new to trading, I want you to do this as well. Let me know 1 or 2 reasons why you love trading. Again, if you're brand new, give me maybe 1 or 2 reasons as to why you're interested in trading. For me personally, though, the market has no bias, and I love that. It doesn't know you exist. It doesn't know I exist. It doesn't care about you. It doesn't care about me. And the thing is, that's beautiful. Right? This means your background, your education level, none of that stuff matters. If you can focus on the things that matter, the rewards, the freedom, they're all there for the taking. And with that being said, I think a lot of us have this in common, even as a younger kid. That's why I saw trading as my chance. My chance to take life into my own hands, and more importantly, for me at least, my chance to wake up every day focusing on something I love. You also see a few basketball jerseys here. I am a huge basketball fan and an even bigger fan of the late, great Kobe Bryant. And interestingly enough, a lot of his mindset that he applied to the game of basketball, it's been really helpful here in the game of trading. Now, in terms of how I ended up joining the Dream Team here at Simpler, last year I published a video on the squeeze setup to my YouTube channel. And we'll link the YouTube channel here as well. Ultimately, that video took off and it caught the attention of the folks here at Simpler. So they reached out to both Chandler and I through email. They flew us out, wined and dined us, and now we're a part of the team here, and the rest is history. And again, I'll make sure we drop the link here, in the alerts to that squeeze video, so you can go on ahead and check it out. But now that you guys know a bit more about me, let's get into the real reason that you're here tonight, the trading. And I want to start by showing you an example of a trade I did on Google back in May 2021. So this trade is an example of the types of trades I love. And it ended up being about a $15,000 profit. Now Google, good old Google here, used to be one of my favorite stocks. And I say used to because I don't play the favorites game anymore. It's not going to work this year. What is going to work is focusing on setups exactly like this one, wherever they may be. And pretty cool, right? In a few slides, we can actually compare the recent setup in Google to the setup in a little-known stock. And another thing to keep in mind is for about a year or so, it really was as easy as let's wake up, let's run a scan, let's find a squeeze, let's get long, and then we'll hit the beach, right? And we'll hang on tight without much concern for the downside. Again, banking on the market, bailing you out. So these are the same setups I'll be trading this year, both long and short, but the emphasis now has to be on the risk reward. Can't just get long, sit back and take it on the chin, and expect everything to be fine. But this is my favorite combo, squeezes and credit spreads. And I've been doing this for years now. It's just that recently I've had to make some tweaks to better maximize all of this. So that was a great trade. But to be transparent, my goal isn't to make every single trade end up like the Google trade. At the end of the day, if we're going to be realistic, none of us can make every single trade a winner. And hey, if you think you can, well, the market will quickly show you that is impossible. And I know all of you know this. Right? The reality is, and we all know the reality, losing trades are a part of the game. So, the million-dollar question is, are you good at taking losses? That's kind of a weird question, right? Are you good at taking losses? Meaning, are you taking losses in a fashion that makes forward progress possible or impossible? For a lot of us, that probably wasn't a question we were asking ourselves back in 2020 or early 2021. Well, guess what? Now I think it's a question we should all be asking ourselves. And early in my options trading journey, one way I got a lot better at taking losses and increasing my win rate was through the trading of credit spreads. In the day I committed to trading nothing but credit spreads, that was a huge, really, really big turning point in my career, and what that led me towards finally finding consistency and peace of mind. Now keep in mind, while I do think there's a whole lot of value and edge to selling credit spreads, especially in this market, the things we're going to discuss tonight will be helpful for you in any strategy. Now, truthfully, though, I do think credit spreads are going to offer some massive edge this year. But why do I use credit spreads the way that I use them? We'll keep it simple, right? Basically, I have wiggle room. I have way more room for error on my trades, which just kind of makes it easier to either walk away with profits or, more importantly, to control risk within my parameters. With credit spreads and the way I structure them, I'm only taking losses when the structure breaks. I hate taking losses inside a choppy noise. So for me, something has to change in order for me to be wrong on the trade. However, this isn't your grandpa's credit spread, so to say. So those deep out the money, risk 4 to make 1 type of credit spreads, those work great until you take one losing trade and you wipe out your last 5 or 6 winners. So truthfully, with how they're typically taught and traded, credit spreads are kind of a recipe for spinning your wheels in place. And to be honest, I've made a lot of adjustments to how I trade my spreads in order to better maximize my results and my win rate. But just understand this one thing though, it's really the combination of the setup and the strategy that leads to success. But to keep things simple, I love credit spreads because they allow me to structure trades with the risk versus the reward is very much in my favor. And better yet, I'm not at risk of getting crushed should a stock just simply trade sideways. And I'll show you how this works in a few more examples here tonight because credit spreads really did change my game. And that's what led to my consistent account growth. However, the important thing to note is that the way credit spreads are typically taught, the math just isn't going to work. And I'm curious, have any of you traded spreads and it works incredible for a while, you keep raking in winning trade after winning trade, and then one losing trade wipes away all the recent winners? Have any of you done that before? I see a few of you. Yeah, it stinks, right? Yep, definitely stinks. So I've been there, and I think we can avoid going there moving forward. Now, in 2021, because I'm going to show you some, some numbers from last year. Now, keep in mind, a lot of the trade examples I'm going to show you tonight, they do come from a larger account of mine, which I grew by 98% in 2021. And we got some screenshots here of the bigger account. But when I joined Simpler last January, I had a goal in mind. So when I joined last January, I started trading a small account with a goal of turning it into a 7-figure account over the course of time. My goal is to be here at Simpler for as long as they want me. So it's my hope that I'm going to be here working with you all for the next 20, 30 years. So when I joined last January, that was the mission. I'm going to keep trading my bigger accounts, but let me start a smaller account here, and let's document the growth over the next 5, 10, 15, 20 years. So for my Simpler small account, the starting balance was $40,000 in January. To end the year, the balance was $70,000. So it's a profit of about $30,000, and in terms of percentages, because that's what really matters, 75% return on risk. And my goal for this year, making some adjustments and making some tweaks, is 100% plus return. Now, 75% is solid. There's a lot of improvements to be made. So here's a few of them, right? While respecting the trend last year. So getting on the right side of the market, getting on the right side of the path of least resistance, while that was super fruitful, trying to short this market and trying to call tops was painful. So in that smaller account last year, trying to short a crazy uptrend, I lost $6,000 on SPX, and I lost $7,200 trying to short the good old NDX. If I just simply respected the trend, that's over $13,000 in losses I could have avoided. Now, I bring this up because this year it's going to be even more important. We have to respect the trend, and we got to respect the path of least resistance at all times. Bullish market, bearish market, choppy market, you have to be on the right side of things. So those are some of my bigger mistakes last year, trying to call for tops and just taking counter trend trades. Another mistake of mine last year, and like I mentioned earlier, there's so much momentum, this market just keeps rallying higher. Okay, you might have to sit through a pullback, you might have to take some heat, but the market's going to come on around and save you once again. Well, at one point during the year, I was up over $5,000 on Google. What happened? Well, I didn't respect risk. And I banked on that market continuing to take care of everything. Look at the end result. I made $238 on Google. I gave back basically $5,000 plus. So we can't do that in 2022. We can't have this mindset where the environment is going to take care of everything. We want to be thinking in terms of numbers, most importantly risk versus reward. So the way that I look at things is, 75% is solid, and 98% in the bigger account is solid, but my year could have been way better had I not taken counter trend trades and had I thought more in terms of managing my risk as opposed to focusing so much on the reward. So along with those two factors, had I kept the losing trade smaller, it actually would have been one of the biggest years of my career. So it's not that I'm upset about last year's growth, and quite frankly, the market did get pretty difficult there. But I'm looking at my results and I'm just being honest with myself. There's a few simple tweaks to make to really improve these results, and that's what I'm going to share with y'all here tonight. Now here's the key in terms of credit spreads, because as much as I love credit spreads, and mind you, I've learned a lot of lessons with spreads the hard way, it's how you structure the credit spread that will dictate how well you're able to work the numbers. So what we have to stop doing is looking at credit spreads as just income trades. When used correctly, they can actually be one of the best strategies to produce a good win rate and a good risk reward. Let me know in the chat here, but I think for all of us, that's the holy grail. A good win rate with our winning trades being larger than our losing trades. And we can take a look at a few examples here. This is actually a current trade of ours from the Mastery. So on January 11th, we initiated a short position by selling a call credit spread on IWM. Here's the key. Before entering the trade, we identified our profit target to the downside, and we identified our exit level to the upside. And then by structuring a credit spread in a certain fashion, we structured a trade with a great risk reward. So at our $200 target to the downside, the profit per contract is about $110 per contract. On the other side of things, at our exit, at our line in the sand, so to say, our risk is only $45 per contract up at $222. So I'm risking $45 to make $110. Now I'm picking both of those levels based on some simple stuff, but the beauty here is the risk reward. It's better than 1 to 2. So there's a 140% difference between the profit and the potential loss on this trade. So can y'all see the power in this? Put it this way. We don't even need a good win rate when working these kinds of risk reward figures. However, for me, the goal is always to work the best win rate possible, because that's the best of both worlds. And we're super close right now to getting filled on our exit order that'll lock in about an 85% return on the risk. And I get it. Right? I understand, because I've been there, I understand that there are so many emotions that get in the way of trading. And it's just human nature, really, to feel those emotions. But when we can trade like this, identifying both our targets and the risk reward between them before taking the trade, it truly does eliminate a lot of the emotion. You're just making sound business decisions. And we'll talk more about picking these targets and the importance there in a little bit. But in terms of goals, at least my goals, the goal isn't to hit a home run on every trade. There's going to be losses, there's going to be wins. My real goal is to utilize strategies that can produce the most consistent results possible, because that allows me to steadily compound the account. So we really got to make that numbers game that is trading, both the wins and the losses alike, work in our favor. And quite frankly, it's our only choice if we want to be successful, especially as things start to change here as far as the market environment. Right? But that's my only goal as a trader. So in my game, I found the greatest success, consistency, and most importantly, the most peace of mind by focusing solely on selling credit spreads on squeezes. And the recent tweaks that I made to the strategy, they're just meant to ensure that the risk-reward numbers are always working in my favor. But we're going to get diving in now, right? This is like the meat and potatoes, so to say. This is what we're aiming for. There's 3 facets of what I would call consistent aggressive growth. We need a good win rate, we need a good risk-reward ratio, and we want frequent opportunities. And what I'm focused on doing is trying to generate about a 70% win rate by trading the best setups possible with very specific entries exclusively with credit spreads, but it's not your typical, call it old-fashioned spread. So we'll get diving in here to these three facets. But a good win rate. Now, in terms of working a good win rate, last year in the options room, we had about a 70% win rate, trading these very specific squeezes that fit my criteria, and I'm always trading them with credit spread strictly. And in terms of my criteria for a good squeeze, and a lot of you are familiar with this, it's really just a combination of trend, structure, and momentum characteristics. I kind of call that the big three. Trend, structure, momentum. But I'm only trading them with credit spreads. So to me, a focus on a good, clean setup, that's how you work a good win rate. And you got to work good entries as well. Working good entries, especially in this market, is going to be super, super important. Now, in terms of risk reward, so like I mentioned earlier, these are just basics. We can't let our losing trades be bigger than our average winning trades. This is just the simple math of trading. The issue at hand right now is that in a market like we've seen over the last year and a half, 2 years, it's easy to forget about that math. So, like I said, this is back to the basics. And with the adjustments I've made recently, at a bare minimum, I'm enforcing a 1-to-1 risk-reward ratio. But really, better yet, I'm aiming to risk 1 to make 2. However, bottom line, I will not allow my risk-reward to dip below 1-to-1. Right? So this means my losing trades cannot be bigger than my wins, and this is how I'm aiming to maximize a good win rate. Now, in the past, right, I'm sure a lot of you have done this, and I have certainly done it myself. In the past, my losing trades would cause too much damage. Right? And let me know in the chat if you've been here before. My losing trades would cause way too much damage. So they forced me to take, way too many steps backwards. I don't let that happen anymore. And my suggestion for all of you here tonight is, you don't let that happen either. I'm confident even in a shifting market, we're going to end up this year cranking out that 60-70% win rate. And while that's something most traders will only dream of, you got to work the risk reward, because that kind of win rate, it is a terrible thing to let go to waste. Right? But working the numbers. Now, I'm not sure if any of you are doing this, and I can promise you, if you're not, you want to start to do this immediately. And to be transparent, right, I lost sight of a lot of these basics over the last few years with this wild market. But before you enter any trade, and I'm being dead serious about this, do not take a trade until you do this. There's 2 things you have to identify. The first thing is your targets. You got to identify your profit target to the upside, and you have to identify where to exit the trade on a loss of structure. So for me, figuring out these targets is actually really simple, and I can show you how I'm doing it. But before you pull the trigger, you got to know your targets. Right? This is big, important stuff here. Number 2, you need to know your numbers. So I hope you all can see where we're going with this, right? This is trading like a professional. This is trading like it's your livelihood and like it's your business. You need to know how much you'll make if you're right on a move into your target, and you have to know how much you'll lose on a move into your exit level. Right? Again, before you enter a trade and you put your hard-earned capital on the line, you have to know those 2 things, your targets and your numbers. Right? Now, what's the goal here? Why are we identifying those 2 things? What's the goal? Well, when we trade credit spreads correctly, our goal is that our profit at our target is greater than our loss at our exit level, at our line in the sand. And I know I'm being super, super repetitive tonight, but it's important. I'm doing it for a reason. Trading's a numbers game. It's a business. It's just that simple. It's a business. Your winning trades have to be bigger than your losing trades. So now imagine if you could go into every trade knowing exactly where you need to work your exits in order to work that solid risk-reward ratio like a pro. And this is what I can teach you. But this is how we work the numbers between risk-reward. And then it's the laser focus on very, very specific setups with very specific entries. That's how we produce the good win rate. So take a look at an example here. Now, this isn't a trade that I took. But this is an exercise I've started to do almost every day. And I'm going to show you how to do this exercise. As I'm running my scans and I'm looking for squeezes, both bullish and bearish, before I even think about putting the cash into the trade, I'm figuring out my numbers here. So here's a recent example of a trade I was pricing out on Lucid. Right? and I want to show you how I was able to structure this trade with zero emotion. Now in terms of the setup here, it's a beauty. Daily squeeze, weekly squeeze, you got positively stacked EMAs, you got some beautiful green 10x bars, trading at the 21 EMA, and if that all sounds like another language to you, don't worry, I got you. I can tell you what all that means, but generally speaking, this is a great example of the only kind of setup I want to trade to the upside. Now in terms of my targets, again, you gotta know these before you jump in. My target to the upside is about $50 per share, and my line in the sand, my exit, no questions asked, is about $36 per share. And I can teach you how to pick these targets, but check this out because I think this is freaking sweet. My profit on a move into my target is $360 per contract. My loss down on my line in the sand is $180 per contract. That's a 1 to 2 risk reward. Again, I don't even need a 70% win rate to make that kind of risk reward work in my favor. But that 70% win rate is very achievable when we focus on the right kinds of setups with the proper spreads. So this is how we can achieve aggressive growth and make our losing trades a non-event. Now imagine instead here, I hope and I pray and I watch Lucid dump against me and I let it turn into a $600 loss. Well, guess what? That sucks because I'm only going backwards. But here's where things get even better. To me, this is some of the built-in beauty of credit spreads. And really, this is why I'm dying to show you guys the adjustments and the tweaks I've been making to my game. The max profit on the spread is over $600 per contract. So if Lucid just simply trades sideways, I might walk away with a $500, $600 profit at expiration, while all the while, my risk is going to remain right around about $180 per contract. And as a matter of fact, our risk is actually getting smaller each week because now I'm using trailing stops with weekly moving averages, which has been quite the game changer. But guys, let me know in the comments here, right? Is it all making sense? Can you see the power in this? It's all trading is, like anything else. It's a business and a numbers game. And this is how we can make the numbers work in our favor. It's all very specific. The setup, the entries, and the spreads. But another important element with these kinds of trades is frequency. We want a lot of them. And this, for me, has required a real big-time shift in mindset. But this is where I want to get you thinking differently. And this is an important shift for me. But if we can focus on the best setups and we can generate that good win rate, and we can keep our risk reward in line, well, the truth of the matter is we should be looking for as many opportunities, as many at-bats as possible. Here's what we tend to do instead. And I've done a lot of this in the past as well. We tend to make each individual trade such a big, mental, emotional ordeal. We tend to make each trade almost like do or die. We attach all kinds of expectations to every trade, and let me know if you guys have done this. But we attach all these expectations to the next trade, like this is going to be the big one, and that's no bueno, right? No good. We don't want to do that. Instead, let's look at each trade as nothing more than a flip of the coin, right? It's 1 of 100. It's 1 of 1,000. And if that coin can land on heads, say 70% of the time, and each time you get paid $1 versus you lose $1 or less when it lands on tails the other 30% of the time, well, under that scenario, we would want to sit there and flip that damn coin all day long. So what I'm trying to preach to all of you here tonight is start to model your approach to trading around that mindset. Focus on the right setups, structure trades that allow you to work a good risk reward, and simply look to work these numbers as frequently as possible. Right? So I think this is a big one, but I also think this should get a lot of you motivated and excited. It isn't so much that the good setups are disappearing. What I've found is, to some extent, they'll always be there. What's happening right now is it's just that the good setups aren't in the spots that we focused on so much over the last few years. And again, I'm definitely guilty of this, but we can't have favorites when it comes to trading. So remember, it isn't about the stock, it's about the setup. And we can't keep going back to the same wishing well, so to say, over and over again, forcing the issue. Rather, we want to act like little magnets, just following the good setups wherever they may be. But I want to show you a few recent charts here. Because I love my Amazons, my Googles, Nvidias, Teslas. I'm sure a lot of you seen the recent moving forward. Now, fortunately, we caught that in the options room, but this is the kind of thing I would ignore in the past. it'd be there on my scan results. So it's right in front of me, but because it's not quote unquote sexy, like in Amazon, I would ignore it. It turned out to be a great trade. In Ford versus Amazon, it doesn't matter. It's setup versus setup. It's structure versus structure. Here's another one in Domino's Pizza. I show you this one because I laughed at it. I'm running my scans and I'm like, oh yeah, Domino's. That's what I want to trade. Well, guess what? If my focus is on working the numbers as much as possible, I should have been taking the trade here in Domino's. Here's another one in ON Semiconductor. So while AMD and NVIDIA, right, the kings of the semiconductors, have really been struggling to get anything going, you had a beautiful move there in ON. Another beautiful move there in MP. And now here's a stock I don't think I'd literally ever heard of, but the setup was picture perfect in DWAC. There's a daily, a 4-hour, a 2-hour squeeze with green 10x bars, and we have buy signals on basically every time frame. So it's a beautiful setup. Here's the issue, though. If that was Apple, right, if that was Google, if that was Facebook, so many of us would be all over it. The bigger issue is, even when Apple and Tesla and Facebook don't have this good of a structure, we're still trying to force the issue. Right? And this is what I mean. We want as many good opportunities to work the numbers as possible. We just can't pick favorites, and we just have to know where to look. So check this out. Google, right? my old favorite Google, recently versus DWAC. I'm running my scans. I'm looking for trades at the options room, looking for trades in the mastery. Are we going to take the good setup? Or are we going to force the issue here on one of our quote-unquote favorite stocks? If you're trying to be successful and you're trying to grow your account, setup versus stock. So you already know we went with DWAC here. So on January 10th, again, not because I'm familiar with the stock or anything like that, but because of the structure, we took an entry on January 10th and we flipped it for about 100% return overnight. Rinse and repeat, right? I want more of those. I want as many of those as possible this year, and I don't care where they are, right? If there's good structure, if there's good liquidity, and the numbers make sense between my targets, I'm taking the trades, right? I'm taking the trades. But as things change, I just think it's super, super crucial. You got to start approaching your trading like a business, and keep it simple. When you're losing, if you're losing 2 times what you make when you win, it's not going to work. And even if you're losing, 2 times what you make when you win, you're just not going to make much progress, and you're going to have really large drawdowns. So here's an exercise for each of you. And what I would actually like is do this exercise tonight, do this exercise later this weekend, and then shoot me an email. I want to see if anything sticks out after you do this. Take a look at your last 10, 15, 20 trades. Compare the average win, compare the average loss. See if the numbers even make sense. And feel free to reach out to me via email, and we can kind of talk about it together. And I can show y'all how to have a level head and how to approach your trading like a business. But at the end of the day, you have to know your numbers. This is your business. You got to know your numbers. So how much are you going to make if you're right? And better yet, where are you right? What's your target? And how much are you going to lose if you're wrong? And what's your exit plan? Right? Are you getting stopped out inside of noise? Or are you taking exits that really reinforce the idea that you want your losses much, much smaller than your wins? So kind of some basics here, right? But those are the 2 variables that we want to focus on. Win rate versus risk reward. What I want to show you is you might have a good win rate, but if the risk reward numbers don't make sense, it's really going to impact your trading. So let's assume we can nail down that 70% win rate. But in terms of risk reward, even with a 70% win rate, what happens if our losses are 2 times bigger than our average gain? Well, if we take 100 trades, you're going to have 70 winners. So at $1,000 each, you generate 70 grand. You're going to have your 30 losses, but the 30 losses are 2 times bigger than your average profit. Right? So 100 trades later, you're only up $10,000. Is it growth? I guess. It's not the growth we're looking for. Here's where things get ugly. If your average loss is 3 times bigger than your average win, well, guess what? Your win rate doesn't really matter. Okay? You could have a top-notch 70% win rate. Because the risk-reward numbers are off, you're still going backwards, though. This is where things get interesting, right? And this is my proposition to all of you. Bare minimum, bare minimum, keep the losses equal to the profits, this is where some steady growth is possible. Now for aggressive growth, this is why I'm more so aiming to risk 1 to make 2. If my average profit is twice as big as my average loss, mind you, you don't even need the 70% win rate. And I'm going to continue to try to produce a 70% win rate by focusing on really good setups. But hopefully you're getting the point here. Right? Even with a good win rate, it's that risk-reward ratio dynamic that's really going to gauge both your forward progress and the average size of your drawdowns, which you can take a look at here in just a second. And then another question I've been getting a lot on YouTube that I just want to touch on is, well, what if we don't trend at all? What if it's not so much a directional market? It's not a bullish market, it's not a bearish market. What if it's a total chop fest? Well, we can still work the numbers. So in my bigger account last year, I made a little over $40,000 on the chop fest, formerly known as Big Amazon here. So Amazon's a total dud, right? Just trade sideways for a year and change. However, I'm coming in with the credit spreads, still collecting some good premium. So maybe the bull trend, the bullish market continues. We'll see. Maybe we go into an all-out bear market, or maybe it's a total chop fest. No matter what, we're going to be in good shape if we focus on the right stuff. So why are so many traders struggling? And I think if we believe we can work a 70% win rate, again, the major factor now is how much are you losing when you're wrong. This is my biggest issue with how the credit spreads are traditionally taught, right? They're taught in a fashion that's very high probability in nature, but the risk reward sucks. You're risking $400 to make $100. You're risking $500 to make $100. So you're cranking out win after win, but oftentimes the losing trades very much so outweigh the winners. So even with a good win rate, you're actually going backwards. It's kind of like Vegas. So this just makes it mathematically impossible to make money. So the point being, at the end of the day, you can still lose with a winning strategy. You might be trading the right setups. You might be taking the best entries. It's the risk-reward numbers that really dictate everything. So I really think there's just a few small changes, right? A few small simple tweaks that we have to make in these market conditions to start turning our losing trades into winners, but more importantly, making sure our losing trades are kind of a non-event. It's just kind of the reality of trading, so to say. But I wanted to show you all this here. So one of my colleagues created a spreadsheet for me, and this can simulate a bunch of different variables. Right? You plug in a win rate, you plug in a max loss, you plug in a max return, account size, number of trades, etc., etc. The numbers that I plugged in here, mind you, this spreadsheet with a click of a button takes these variables and runs through 1,000 trades, all totally random. Right? All totally random, but based off the numbers you punch in. So what I'm showing you here is 1,000 random trades work in these numbers. 75% win rate, and it could be 70, but 75% win rate, and risk-reward ratio here is 1 to 1. So just take that, take those numbers. You can take 100 trades in a year, 75% of them are going to be winners, 25% of them are going to be losses. The outcome is totally random, and our risk-reward ratio is 1 to 1. Okay? This is what I'm trying to drive home. And mind you, I'm aiming for 1 to 2. But hey, even with 1 to 1, if you can work that risk reward and you can work that win rate, check out the compound annual growth rate. Okay? Over a 10-year period, consistently working these numbers right here, your compound annual growth rate comes in at about 250% per year. Now that's solid, right? But we've all taken webinars and we've all taken classes where the focus is on reward. The focus is on the profits. More importantly, check out the max drawdown. If you're working a good win rate and you're keeping your losses, if anything, the same size as your wins, check out the average drawdown. So you're cranking out 200 and 250% compound annual growth rate, but your max drawdown at any given time is about 10 to 12%. That's the balance we're looking for. And you can only achieve that balance when you're managing risk. If your losses are 3 times bigger than your wins, well, even a 90% win rate, you're going to be in a little bit of trouble. So I hope you can see the power in that. It's a really interesting tool that my colleague Chris put together there. Now, a few trade examples. And again, 2020, 2021, the name of the game was run a scan, find a squeeze, get long, and go hit the beach, and the market takes care of everything. So I'm still going to continue to focus on these kinds of setups, right? The same structure, the same indicators, but like I mentioned earlier, I'm pulling that trigger only when I've identified two things. My targets, both to the upside and the downside, and then I got to structure a credit spread in a fashion where, ideally, I'm risking one to make two. That's the goal moving forward here this year. So same setups. The focus now is on the numbers, though. The focus is on the numbers. Because when we combine my strategy, the proper setup, and the squeeze all together, it just really stacks the probabilities in our favor. So it's my belief this is how we can continue to achieve that 70% win rate. And I kind of like to call it, defense in advance. Because mind you, I'm using a pre-trade checklist all laid out, so I know exactly what to expect before I enter the trade. And with credit spreads, structured properly of course, we can easily improve our worst case scenario. So a lot of times if you buy a call or you buy a put, hey, your worst case scenario might be the stock just simply trades sideways. And interestingly enough, and I looked at all my results from last year, if instead of selling credit spreads I had bought options, my win rate gets cut basically in half. Right? Instead of a 70% win rate, you're clocking in closer to 40 to 35%. So there truly is a lot of edge to a well-structured credit spread. But what I'm trying to advocate here is, the days of letting those trades completely come against you, you're taking it on the chin, you're letting it go to max loss, I think those days should be done and over with. Instead, I think we want to exit and manage risk based on what the numbers tell us. And again, wouldn't you like to know that game plan before you enter the trade? So that's where this all comes together, because we can draw that line in the sand super, super clearly for where we got to take profits, for where we got to take an exit, and for where we want to look to add additional exposure to a trade that we're already in. And I'm sure a lot of you are wondering, well, it sounds simple, but can I do this? I'm 100% confident that you can. So another example here, and this is a trade that we actually took off in my mastery for a loss today in MP. So in order to work our desired risk-reward ratio, before we entered the trade, we already knew we can only allow for a move down into about $44 per share. And today, it fell below 44. So what do y'all think we did? Did we hold on to the loser? Did we hope and pray that Mama Market will come save us again? No. Without hesitation, we made the correct business decision, and we cut the trade loose. Right? So my only focus is on managing the risk and then letting the winners take care of themselves. So on this trade, the max loss per contract is about $240, and we ended up losing about $90 per contract. So we only lost about 37% of our true risk. More importantly, at our profit target around 95, our profit target on a move into 52 is about $95 per contract. So, while I do want to aim more for that 1 to 2 risk-reward ratio, this was still in line with our parameters. But sometimes you just got to accept the loss. Right? It's a cost of doing business. There's just a major difference, though, between managing risk and accepting a loss and letting it completely go against you. The numbers just completely start to work against you. It just makes your job so much more difficult. So much more difficult. Here's another trade example, and this is actually one of my favorite trades that we've had over the last few months here. And it wasn't a profitable trade. But as Netflix pulled back to the daily 21 EMA back in early November, it fit the bill. It was a good structure. So we sold a put credit spread, looking for that trend to continue higher. And ultimately, she dumped on us. Broke down and lost structure. We managed it perfectly. We bought it back for close to break even on that little oversold bounce. So listen, if you can take a shot at a good trade and it falls apart and you walk away at break even, that's a big W in my book. And I think it should be viewed as a win in your book as well. Right? You're managing, you're protecting the risk. You're doing your job. So at the end of the day, I don't want y'all to get discouraged by your losses. They're a part of the game. And now you just want to have that mindset of, okay, they're a part of the game, so how do I get good at taking them? How do I get good at taking them? And a few more trade examples here. So again, when you look at a lot of my trade examples from last year, this is a $25,000 profit on Amazon. It's Amazon, right? It's Apple, it's Facebook, it's Google. It's a lot of the same names because that's where the opportunity was. The last three to 4 months or so, I'd say, trading these names have been difficult. They don't have the same momentum. They don't have the same trend. They don't have the same structure. But meanwhile, there's DWAC. There's Domino's Pizza. There's Ford. There's still plenty of good-looking opportunity out there. So remember, it's the setup versus the stock. Always, always. Here's a screenshot of the positions from Amazon in the Thinkorswim platform. Now, I do want to touch on psychology here real quick, because when it comes to psychology, if our losses are smaller than our wins, then a good win rate just takes care of everything. So really start to view each trade as a flip of the coin. And with the right setups and the right strategy, the coin flip is going to land in your favor more often than it doesn't. We just want to swing as many clean setups as possible, always working that favorable risk reward, right? But your next trade is not do or die. Your next trade is not make or break. Your next trade's 1 out of 1,000. If you're going to trade for a long time, it's 1 out of many thousands. It's just a flip of the coin. It's just a drop in the bucket. And another example here of a recent trade on Tesla. Right, so, believe me, you gotta love when the market just consistently trades higher and higher and higher. It's a whole lot of fun, but the issue is, like I mentioned at the beginning of the webinar, without even knowing it, we're developing some bad habits. So am I going to continue to focus on trading nothing but setups that look exactly like Tesla this year? Absolutely. But what am I doing before I jump into that trade now? I got 2 things I got to identify. My targets and the risk reward between them. And that's what dictates whether or not I'm selling a good credit spread or a crappy credit spread. It's the risk reward between those 2 targets. But I know I've thrown a lot of information at you guys tonight, but I want you to remember that, this really is possible, and I think it's simple. It's just these transition periods in the market, we as traders and really we as humans, we can be a little bit slow to make those adjustments. But if we can make them, I think we're going to be in great shape. And mind you, I wasn't always great, in what I was doing. Trading, school, the corporate world, but and I think a lot of you probably have this a similar personality. I'm the kind of guy where I love the few things that I love, and I don't really have any interest in anything else, quite frankly. And I know a lot of you can relate. So that personality trait, that laser focus on my passions, it didn't really work for me in school or the corporate world, but it has really done me wonders here, as far as trading goes. And like I said, I saw this as my chance. And I think we all kind of got that in common. But you want to find a balance, right? You want to chase your dreams as a trader. You want to look for your growth, right? You want to hit all those goals, but you want to enjoy the process, right? You don't want to let it impact your personal life. So I love the career and the life balance that I've been able to create from trading. And at this point, what I'm really most passionate about is helping other traders like y'all here tonight avoid the painful mistakes and find your own consistency. And in this current market, I continue to believe firmly we can continue to do that. So we have covered a lot tonight, my friends. We covered how important it is to have and maintain a good win rate and a good risk reward. And I think we talked a lot about, some of the more common mistakes that a lot of traders are making. And just, kind of looking at some of the major reasons as to why so many traders aren't making the consistent money they're looking for. It isn't really so much an environment problem. It's a lack of adjustments to the environment. Got to make the adjustments. So I showed you my simple setups and my strategies that can lead to some really good growth, even in a potentially difficult market. So how can I help you out even more? How can I provide you with even more value? I want to make a commitment to each of you here tonight. I want to share with you the tweaks I'm making to my trading. I want to show you how to structure the best credit spreads. Most importantly, I want to really make sure that before you take your next trade, you're going into it knowing damn well whether that risk reward is working in your favor or is it working against you. All I ask from each of you in return is be open-minded to making the necessary adjustments and really be open-minded to shifting your mindset as it relates to losing trades. The sooner you can start to look at your losing trades as nothing more than a cost of doing business, the sooner you're going to get out of your head and out of your own way emotionally, right? We got a few testimonials here from the options room. But like I mentioned, my favorite part of this job is every single day in all the trading rooms here, I get to work with a lot of traders. So, I hear the frustrations. I see the struggles, and so much of the adjustments I'm making in my game are to help y'all out as well. Because, let's be real, trading is a heck of a lot more fun when we're doing this all together, in my opinion. So with all that being said, guys, I do have a strategy class coming up here on January 29th, right? So I want to show you a few different packages here, but I'm super, super pumped for this. And like I said, I've done classes, I've done webinars. The way that I'm looking at this class is, I hope to be a father one day. And I'd like to think potentially my kids might have an interest in trading. If that is the case, this is the class I'm going to want them to watch. It's not just offense, it's a lot of defense as well. Right? You're covering both aspects here. So here are the different packages for the class. You have your basic package, your pro package, and your elite package. Now here's some good news. Regardless of what package you pick, and a lot of you have been asking for this on YouTube, so we got you. You get your own stacked EMAs label, included. I'll show you how to use that. And you're going to get a bonus introduction class to credit spreads, which I think is really important, especially if you're newer to credit spreads. We got you covered there. But let's take a look at the packages, all right? So with the basic package, you get immediate access to that Intro to Credit Spreads class, and you also get access to the strategy class on January 29th, which runs from 12 to 4 p.m. Central. And as always, with our courses here, you're going to receive a bunch of support documents to help you, so that way you can get right to work and start practicing this credit spread strategy. But again, those of you that are newer to credit spreads, I've been there before. It's like, what the heck is this? It's a different language. Vertical, you got a long option, you got a short option. I hate the way credit spreads are typically taught. It's almost as if people who teach them are trying to make it more complicated. It really is really simple. So if you're brand new to credit spreads, this intro class is going to basically give you the foundation that you need, right? The basics, the essentials. That way you're going into that strategy class fully prepared to take advantage of everything that we're going to discuss together. Now let's talk live trading, because the more time that we have together while the market is open, the more value that you're going to get. And to be frank, my biggest goal with the live trading is you make your money back. There's nothing a trader loves more than a quick return on investment, but really what I'm super pumped to do with each of you in the live trading is that exercise. Okay? So we're going to run the scans, we're going to look at good long setups and good short setups, but then together we're going to do the two things we have to do before we take any trade. Okay? And we're going to do it together. We're going to pick the targets, and then we're going to figure out the risk reward between those two targets. And no joking aside, I want to do that like 30, 40, 50 times. Right? I want to pound those principles into your head, because I really believe that's what can keep you successful in the market this year. So that basic package, it is a great value, but again, the live trading sessions, that's where I think the most value is. So with the pro package here, you'll get access to everything in the basic package, along with 2 live trading days, and those are on February 3rd from 11 a.m. to 1 p.m. Central, and again on February 7th from 12 to 2 p.m. Central. And I'll walk you through the checklist and the setups of you live. We can trade together. But again, I want to do that exercise. I'm really excited about doing that exercise with y'all. I think you're going to find it game-changing. I really do. I really do. Now, the elite package here, this is the granddaddy of them all. With the elite package, you're going to get access to everything in the basic package. You also get access to the 2 days of live trading from the pro package, and another 2 days of live trading on February 10th. And February 17th. So I think this is great. The more time we have together, from one perspective, it gives y'all more of an opportunity to ask me questions and pick my brain. But the more time we have together, it just better increases our odds of making enough money on our trades to cover the cost of the course. Right? I want to give you that quick return on investment. There's nothing more a trader loves. Quick return on investment. But I really want you to have the credit spreads locked down, right? So you can get all the details from the intro class before we hit the ground running on that Saturday morning. And if you're interested in one of the packages, feel free to visit simplertrading.com, and you can also call us at 512-266-8659. And if you're interested, we also accept PayPal credit now, which is pretty solid. So you figure out what package you'd like, you add that product to your cart, and then you click on that PayPal credit button. Click on that bad boy, and you're going to apply for a line of credit through PayPal with 0% interest for 6 months. So if you know anybody else out there giving out 0% interest loans, please let me know. But listen, y'all, I've really been looking forward to this webinar. My brain has been spinning as of late, making these adjustments to my own trading, and more importantly to me, how can I help y'all here in what's becoming an increasingly difficult market? And it's difficult if you're not making adjustments. I'm a firm believer if you make the adjustments, we're going to keep on rocking and rolling here. So I really have been super pumped for tonight. I appreciate each of you being here. My number one goal tonight was to get you thinking. So what I'd like you to do is go back and look at your last 10, 15, 20 trades. Shoot me an email, right? Let's talk about it together. Let's see if the numbers make sense. And together let's figure out, how can you start getting that risk reward working fully in your favor. Now before I get to all your questions in the chat, we do tend to get some commonly asked questions. So I'm going to touch on a few of those here real quick. Now a lot of you probably took my compounding growth technique class from last year. So there's some major differences between the two classes. The compounding growth technique class was really focused on the setup, right? It was really focused on the setup, the squeeze, the entries, the exits. This all goes way deeper. This class is a true deep dive into how I utilize those credit spreads to fully maximize the growth potential of those powerful setups, right? So the setup is the setup is half the battle. If you're not choosing the right option strategies, and if you're not picking your targets and identifying your risk reward between the targets, then even the best of setups out there, it isn't going to do you much good. So class number 1 was very much on the setup. Class number 2 is, okay, even in a changing market, how can we trade these kinds of setups, both long and short, right? You saw the IWM short. How can we trade these kinds of setups long and short, working the numbers in our favor? So big differences there between the two. And if you're new to trading, with any class I do, I want to make the complicated things seem really simple, because oftentimes they are simple. Folks just tend to overcomplicate them. So this is a class for traders of all skill levels. If you're new to trading, or to credit spreads specifically, again, you can opt into that intro class. It'll give you that solid foundation. That way you're ready to hit the ground running on Saturday. And I'll be teaching the thinking behind the trade. We're going to get a little bit more advanced, right? We're going to have discussions on options pricing. We're going to spend a lot of time in the options chain. We're going to spend a lot of time in the analyze tab as well. And of course, we're going to spend a lot of time talking about the management of emotions, which is a huge part of the game. Now, everyone loves their indicators, and I'm no exception. So, good news here. With the purchase of the class, you're going to immediately receive my thinkorswim chart link. Now, this includes the TTM squeeze, the exponential moving averages, the Keltner channels, which they're going to become your new best friend in this market, and the stack DMAs label. Now, I think I mentioned this earlier. I'm sure we got some day traders here tonight. We got some swing traders, maybe a couple of scalpers in here. I've got my favorite time frames. I like my weekly, I like my 3-day, I like my daily. Reason being is it's what works for my personality, and it kind of requires a few hours of execution per week, realistically. But I really want to make this super clear. Working the numbers in your favor is a principle that all of us need. The day traders here tonight, the swing traders, those who love 5-minute charts, those who love weekly charts, it's the one thing we all have in common. If our wins aren't bigger than our losses, it ain't going to work. So I have my favorite time frames, but whatever your favorite time frame is, I can certainly help you use that time frame to your full advantage, all right? And then in terms of account size, very scalable. So what I found, and I do work closely with a few traders who have what I would call smaller accounts, you can make a lot of this work with an account as small as 5 to 10,000. And I'm trading that smaller account last year. I'm going to continue to trade it this year, but I'm also trading bigger 6-figure accounts as well. So very scalable, which I think is important for any option strategy. But all right, my friends, one more look here at the 3 packages. You got the basic, the pro, and the granddaddy of them all, the elite. So the basic package, you get access to the Saturday strategy class and the bonus intro to credit spreads class, which think is going to be helpful for a lot of you newer traders in here, especially those of you newer to credit spreads. Then you have the Pro package for $897. So you're going to get your access to the strategy class, the intro to credit spreads class, plus the 2 days of live trading. So in the live trading, basically be ready to do a full day of work together. Running the scans, building the watch list, but I'm telling y'all, it's that exercise we're going to do together. Find a setup that we all agree is a good candidate for a long or for a short, and then we're going to structure different credit spreads to really analyze that risk reward between our targets. So we're going to do a whole lot of that in the live trading. And then with the Elite package, you get your strategy class, you get the intro to credit spreads class, 2 days from the Pro live trading, and the additional 2 days from the Elite live trading. So just more time for us to work together, more time for us to make back the investment. And that's always my goal, and I believe with our last class, we definitely surpassed that goal. But once again, everyone, I appreciate you being here tonight. As my colleague Sam Shames would say, you could be anywhere in the world tonight, and you chose to be here. I really appreciate it, and my number one goal, like I said, was to get y'all thinking tonight. So I hope I got you thinking, and I really hope to see you in the class. But if you guys got any questions here, I'm more than happy to stick around and answer as many as I can. What's up, traders? This is Taylor from Focus Trades here with SimplerTrading.com, and as always, I appreciate you watching our videos. If you happen to enjoy this one, go on ahead and like and comment down below, and if you're not already, make sure you go on ahead and subscribe and click that bell icon. That way, whenever Chandler and I upload a video, you'll get a notification once it's live. And if you want to watch us trade live with our own money Monday through Friday, you can check us out at SimplerTrading.com. See you in the next video.